The last time I covered Warrior Met Coal was on November 10th in 2025, and that was the last video I did on this channel about Warrior Met Coal and AMR, both which are in the met coal industry. Since that time, Warrior Met Coal has risen 28 to 29% to a peak of over $100 per share, and now has fallen back to roughly the same levels it was around November 10th, 2025. So in this video, I want to go through their most recent earnings report, their presentation, look at the business, see what has been completed, what has not, and make a judgment on what I'm going to do with these shares and if it's still a good long-term investment for long-term value investors. So if you like this content, please like and subscribe, and let's get straight into it. Now, Warrior is reporting their fourth quarter 2025 results, and they did that as of February 12th, 2026, which was last week, as of the time of recording of this video. So we're going to go through these numbers and their key financial highlights to see what's up. So as you know, and as I've described in my previous videos, they have three mines, Mine 7, Mine 4, and their newest mine is Blue Creek. And Blue Creek is the one that they're spending all this capex on to build out the project. They projected roughly around $1 billion of capex on this, and it's coming to an end. They see the light at the end of the tunnel here, and they're going to finish this up very soon. But they make all different qualities of coal. Each of these mines have different, reserve lives. There's approximate 15-year reserve life in Mine 7. Mine 4 has about a 35-year reserve life, and Blue Creek, being the newest, obviously has the most at 40 years of reserve life, assuming a single longwall operation. And then another important fact out of these three mines is the nameplate capacity. So 5.6 million short tons annually out of Mine 7. Mine 4 can do 2.4 million short tons, and Blue Creek can do 7 million short tons. But adding all of this up will give you the full nameplate capacity of Warrior Met Coal for the year of production. Now, their fourth quarter 2025 highlights include that they've commenced the highly anticipated longwall operations at Blue Creek 8 months ahead of schedule. We saw this in the last earnings report, on budget and funded entirely from cash from operations. So there's no debt here. They're not diving into debt to fund this operation. They're almost complete, and it's been on budget, no hiccups, no surprises, and they're delivering 8 months ahead of schedule, which is pretty unheard of in my opinion. That's really good. That shows that management is really on top of things and pushing things along at a breakneck speed. They achieved record quarterly sales volumes of 2.9 million short tons of steelmaking coal, representing a 53% increase driven by sales of steelmaking coal from Blue Creek of 881,000 short tons. So they're really ramping up Blue Creek, even though it's not fully completed. I think what they're working on now is overland belts and transportation from Blue Creek to the ports and to the railways to get the coal to the eventual departure lanes to their customers. Reduced cash cost of sales, free onboard port per short ton by 22%, which is amazing, to $93.53 in the fourth quarter of 2025 from $119.55 in the fourth quarter of 2024, driven by the inherently lower cost structure of Blue Creek, lower variable costs, and disciplined approach to cost control and operational efficiency. So what's really important to understand is that Blue Creek is not just a new mine. It is a new mine that is operating at a very low cost structure, which is so critical for these miners because it really, especially in a downturn in the met coal market, in those type of scenarios, you want to be looking at the low cost curve producers. The low cost producers, cost structure producers are going to be able to weather any type of storm in terms of the steel market, in terms of the coal market. So you have to look at this when you're looking for longevity, when you're looking for compounding your wealth. You're not looking for a high flyer that will burn themselves out just by their super high costs. So here is what you're looking for. They achieved a 75% increase in adjusted EBITDA of $92.9 million from $53.2 million in the prior year comparable quarter. So huge increase there, 75% increase. They finalized 2 federal coal leases for 53 million short tons of high quality steelmaking coal reserves, which are accessible by Warrior's existing facilities, which is really important because they won't have to spend a lot of money to access these short tons, extending the life of our mining operations. So that just adds to the years that you saw on the reserve life on those 3 mines. Declared regular quarterly cash dividend of 8 cents per share, and this is what they've been doing for the foreseeable past, so don't look too much into this. What really matters is the ongoing capital allocations and returns that they do to shareholders, because Warrior has a history of doing special dividends, which are significantly higher than these regular cash dividends. And if this is 8 cents, I've seen special dividends in the past of 80 cents or 88 cents or higher. And that was when they were even in a worse financial position. This was in COVID, when the only reason they were able to produce these special dividends were because the met coal prices were skyrocketing artificially because of COVID and supply chain issues and stuff like that. Key metrics for the 3 months ended in December 31st, 2025 versus 2024. Here you can see that they had a 53% change in tons sold, 2.883 million short tons sold versus 1.887 million short tons sold in 2024. Tons produced also 61% up, because this is all due to Blue Creek and the ramp up at Blue Creek. So 3.392 million short tons versus 2.108 million short tons. Average net selling price per short ton, $129.6 versus $154.54, which is a negative 16%. And this reflects the downturn in the met coal market, the ongoing downturn. Cash cost of sales per short ton, $93.53, like I mentioned before, versus $119.55, which is a 22% change. And that's really good because you want to see cash cost of sales as low as possible. And then you have revenue in 2025, $384 million versus $297.5 million, which is a 29% increase, mainly due to the increased Blue Creek, production, especially because you can see the average net selling price was lower. So it was definitely due to the higher amounts sold and produced. So net income, $23 million versus $1.1 million, a 1,991% increase, all due to the increased Blue Creek sales. Adjusted EBITDA, $92.9 million versus $53.2 million, 75% increase. Cash provided by operations in millions, $76.1 million versus $54.2 million, 40% increase. Free cash flow, negative $28.3 million versus negative $88 million, which is a 68% decrease, which is good. And it's still negative because they're still spending on Blue Creek to finalize that project. But once that ends, we're going to see a nice high positive number in every quarter after that, because they're only going to have sustaining capex to maintain the mines that they have and their operations going forward. And that's not going to be nearly as expensive as how much they put $1 billion into Blue Creek. It's not going to be like that anymore. Diluted EPS was 44 cents per share versus 2 cents per share a year ago, which is a 2,100% increase. So you're looking at these numbers and seeing, wow, like their tons sold, huge increase. Tons produced, huge increase. Average net selling price, not really in their control because it's about the steel market and the coal market. But it was a 16% decrease, not too bad given the conditions in the market. Cash cost of sales, 22%. Revenue, 29%. Net income, 1,991% up. Adjusted EBITDA, 75% up. Cash provided by operations, 40% up. Free cash flow, up 68%, even though it's negative. Diluted EPS is 2,100% up. So huge change for the better at Warrior Met Coal. The full year 2025 highlights, they commenced the Blue Creek operations and the longwall operations there, and they achieved record annual sales volumes of 9.6 million short tons and record annual production volumes of 10.2 million short tons of steelmaking coal, representing a 21% and 24% increase respectively, both driven by steelmaking coal from Blue Creek. That's why they're putting $1 billion into Blue Creek, because it's really changing their entire business, because they're making so much more production and are making so much more money as a result of those increased sales. Reduced cash cost of sales per short ton by 19% to 101.3 in 2025 from 125.29 in 2024, driven by Blue Creek and lower variable costs and disciplined approach. Maintained total liquidity of $483.9 million, consisting of cash and cash equivalents of $300 million, short-term investments of $43.4 million, which is net of 9.9 million posted as collateral and available liquidity under our amended ABL facility of 140.5 million, net of outstanding letters of credit of $2.5 million. So they're in a great cash position. They have a nice cash balance and they have very little debt. They recorded $76.1 million of cash provided by operating activities despite an average Platts Premium Low Vol Free On Board Australia Index price of $170.8, which represents a 22% decrease from the prior year comparable quarter. And they declared cash dividends of 32 cents per share for the full year. And here are the metrics for the full year versus the previous year. Tons sold increased, tons produced increased, average net selling price down, obviously. Cash cost of sales up, which is good. Cash cost of sales, 19% change, which is good. And revenue down 14%, net income down 77%, adjusted EBITDA down 43%, cash provided by operations down 38%, free cash flow down 43%, diluted EPS down 77%. The 2025 full year achievements versus guidance. Looks like they have check marks on all of these. Coal sales, they achieved within. Their actual was 9.6, which was the absolute high end of their guidance. Coal production, 10.2, exceeded. Cash cost of sales, exceeded at 101.3. Capital expenditures for existing mines exceeded. They only spent 80 million versus their guidance of 90 to 100 million. Their capital expenditures for Blue Creek within 240 million. Mine development costs for Blue Creek exceeded 81.9 million and they guided for 85 to 100 million. SG&A expenses within 65.7 million, which is the low end of this range. Interest expense exceeded 9.7 million, which is the below their low end here. Interest income 18.5, which is 15 to 20 million dollars. And here is just the customer volumes by coal type and geography. I explained this in previous videos, so we don't have to get too much into this. Their leverage ratios and liquidity, their financial metrics, adjusted EBITDA, 256.5 million for the full fiscal year. Consolidated net cash, negative 104.9 million. And net leverage ratio was negative 0.41x. Gross leverage ratio was 0.93x. And this is the quarterly data. Cash and cash equivalents of 300 million. Short-term investments 43.4 million. Asset-based revolving credit agreement availability 140.5 million. So total liquidity is $483.9 million. This is a breakdown of Warrior's capital expenditures. They break it down with Blue Creek project and existing mine capex. So this is their 2025 guidance. We saw how they exceeded or were within the guidance in that previous slide. They've spent approximately $956.8 million on Blue Creek so far. So this is their 2026 guidance after their early startup, longwall startup at Blue Creek. Coal sales at 12.5 to 13.5 million short tons. Coal production at 12 to 13 million short tons. Cash cost of sales $95 to $110 per short ton. Capital expenditures for existing mines, 105 to 115 million. And then Blue Creek project, another 50 to 75 million. So they're almost done. They have spent the majority of the money. They have a remaining of 50 to 75 million dollars left on the Blue Creek project. Depreciation and depletion, 225 to 250 million. SG&A, 75 to 85 million. Interest expense, 20 to 25 million. Interest income, 3 to 8 million. And the last part of this project is basically barge loadout, and that's Q1, penciled in for Q1 2026, and we're already in middle of February. So this should be done very, very soon, relatively. So let's look at their investor letter here. Our team's disciplined execution in the fourth quarter and throughout 2025 delivered exceptional progress at Blue Creek. We're poised for a significant expansion in scale in 2026. And they're having a notable impact on the financial results. So I'm just interested in capital allocation on this letter. Honestly, I've discussed the numbers. So they issued that 8 cents per share dividend, and they don't have anything here about buybacks or anything or special dividends. But on the earnings call, it was brought up from various audience members what they're going to do with their cash after Blue Creek. And it was indicated that they're going to do special dividends, most likely. And if they can, and if the price is reasonable, and they'll do some level of buybacks. So I'm not too worried. I'm going to keep my shares here to see what these special dividends look like, and what these buybacks may potentially look like. Okay, lastly, I want to do a valuation just to check. It may have changed based on the data that just came out, but let's look on Simply Wall Street to see the valuation. And based on this data, it has changed a lot. So according to analysts, with their free cash flow estimates in a few years into the future and just overall cash flow after that with the discount rate, we're getting a $229 cash flow value. And this number was in the 170s or 160s before the earnings report. So it has changed a lot. You can see that it's still 62.3% undervalued at the current price of around $86 a share. And I always like to go through how they derive this number. So going here, you can see that they used a two-stage free cash flow to equity analysis valuation model. Their discount rate that they calculated was 8.2%. The perpetual growth rate, 3.4% based on a 5-year average of a US long-term government bond rate. And the discount rate, they used that plus the S&P equity risk premium of 4.5%. They are in the metals and mining industry, so they use that unlevered beta, which is 1.07. They re-levered that 1.07 to about 1.08, and they plugged that number into the discount rate formula to get 8.23% for the discount rate. Now they have about 3 analysts for 2026, 3 analysts for 2027, and that's where they're getting their levered free cash flow estimates, $333.85 million and $428.9 million. And they discount that using that discount rate every year and then go down from there. So based on that growth rate, they discount that growth rate down for every year for 10 years, all the way to 2035. They add those up, those cash flows up. So they get a terminal value, which is after 2035 and into the future, into perpetuity. They figure out the terminal value. They get the present value of that terminal value, just like they got the present value of all these cash flows each year. They add those two together, divide by the shares outstanding, and they got $229 per share. So that's how they do a two-stage equity DCF. And the 2 stages is the 10 years here, for the next 10 years of cash flows, and then the terminal value. So 2-stage, added together, divide by shares outstanding. So you can see why shares outstanding going down by buybacks is so important, because that can really enhance the equity value per share that you can get from an equity. But that's how they're deriving this. And that is a 62.3% discount to the current price. Based on this information, I'm definitely keeping my shares. I may add to my shares if it drops down for some reason. But these shares are extremely undervalued, in my opinion, based on this data and Simply Wall Street valuations. And I really like everything that I see out of Blue Creek, out of their operations, and what I can see from their free cash flow going forward into years into the future, because they have years of reserve life in all their mines. So I am holding and potentially buying more shares as it drops. But that's it, guys. If you like this content, please like and subscribe. As always, none of this content is financial advice. Make sure you do your own due diligence before investing any of your money. And I'll see you guys in the next one.